Good afternoon, ladies and gentlemen. My name is Alaine Adams. Some people call me StockMom, and it is my pleasure to introduce you to After Market Therapy. This is the place to talk about your trading day, talk about the market, and no matter what happens, we're gonna be alright. It is my pleasure to introduce you to After Market Therapy.
Oh wow. Hey everybody, another episode of After Market Therapy. I'm happy to be back and hang out with you and go through this thing. For those that are new or those that don't know, this is just a show where we come and talk about the trading day and really just commiserate about how much nothing's going the way that we want it to, or alternatively, how much sweet, delicious money we're making. Normally, I like to start my days off with a quote, and same thing with the shows. So here's this show's quote. If a spectator is correct half the time, they're hitting a good average. Even being right 3 or 4 times out of 10 should yield a person a fortune if they have the sense to cut losses when they're wrong. It's by Bernard Baruch. This is really like the basis of my trading style in so many ways. I'm a very high frequency trader. I mean, not, algorithmically high, but a high trading person nonetheless. And the whole goal is to cut the losses as quickly as possible, get off that thesis, and move towards things that are profitable. And when I find something, I run it straight into the ground. Now, I have 2 amazing guests today that I can't wait to hear their take on this and go ahead and get into the market. First off, hey, Patrick, how's it going, man? Oh, Patrick, you're muted, man. Hey, I still can't hear you. I don't know. Let's see. Let's see if we can get something better. Talk again?
Hello, can you hear me now?
There we go. Yeah,
Okay.
loud and clear. Hey,
Sorry.
Patrick.
Hey, Alaine, how you doing?
All good, man. So happy to have you. We've shared a bunch of stages before, so I'm so happy to bring you onto Benzinga and get to see your face, which is it's a big deal.
Yeah, we haven't seen each other's face, or you haven't seen my face before. I've hidden behind the avatar, so yeah, here I am. So yeah, we've traded for a while together. Good to see you.
So happy to have you. And we've also got your podcast partner, Mando. Hey, Mando.
What's going on, everybody? How are you?
Awesome. Thanks for coming. So happy to finally see you as well.
Yeah, first time dropping the face here, but it's all good.
I think the audience is going to be happy. We'll check through the chat and see how the big reveal is going so far.
Screenshots coming. Yeah.
Oh, yeah.
So let's start with you, Patrick. How do you feel about the quote? Hey, 3 out of 4 isn't bad. 3 out of 4 can yield you a fortune if you're trading correctly. What do you think about that?
I think it's right on. We look at baseball. We say the best baseball hitters hit 3 out of 10. I mean, so if you can hit 3 out of 4 in trading, I mean, sign me up. I'll work with you. I mean, 3 out of 4. Good Lord.
Yeah, absolutely. How do you feel about that, Mando?
Yeah, no, same thing. I mean, singles will get it done eventually. It might take a little longer than you want, but the home run's not always there, and you can't force it. So.
I love that. That's actually a really great quote to throw on top of it.
I'm a big baseball guy, so I usually make all my analogies around baseball and sports in general. So
I actually don't watch sports, but I do watch like a lot of things about sports stats.
There you go. Yeah.
So it's just fun to hear people play with numbers. And speaking of playing with numbers, I kind of always like to just find out a little bit about the guest before we get into the show major. So let's start with you, Mando. What started you trading?
Well, yeah, I mean, my story is a little weird, and there was a little gap in time in between. But I actually started back when, in high school, they have you playing that paper trading game. We kind of got thrown into it in an economics class, and me and my buddy were partnered up, and we always were very competitive. So we didn't want to lose or be viewed as quote unquote dumb jocks. So we really put a lot of time and effort into this thing, and we came out ahead. So I always had it in the back of my head, but I kind of just moved on. But then I would say probably towards the end of 2019 was when I wanted to, think about, investing, not even so much trading, just to kind of learn about, there's money to be made here. So, I kind of I got lucky. I didn't put my money in before the, that correction or crash of COVID back in March of 2020. So I got in at the bottom, and I was able to, build up my account when everything rebounded as COVID, as time went on. But yeah, no, now I'm like totally consumed by it. I love it. I talk this stuff all day long, and, I'm looking forward to the future.
Oh, that's beautiful. I think there's so few people who find out about like this type of information in high school. I never got to paper trade in high school, and I wish that was a big key part of understanding like another way to make money. So that's really awesome to hear.
Totally, yeah. And just to piggyback, I mean, in schools, they really don't go to the extent where they could when teaching that financial literacy, in my opinion, at least. So it was a paper trading game, but it was an economics class that was split. First half of the year you take politics, second half you take economics. Really short-lived, and not as much as I think at least our 18-year-olds should learn about the economy in general.
Yeah, absolutely. How about you, Patrick? How'd you get started, man?
So sort of the same thing. I was in I want to say it was like 6th or 7th grade, actually. I kid you not. And in our math class, we did a paper trading back when you had to get newspapers. So for the youngsters out there, that we used to get our news delivered to us in paper form. Yeah, we used to go through it and go through the stock section and make our picks and calculate our earnings or our losses, whatever it was. We were young, and then just always enjoyed it. And then when I went to college, it said, this makes sense. Like, you've got to do this. And I've just kind of always traded, either as a hobby, as a secondary job. I had a career before this, before I now trade full time. But, it's just always something that's drawn me to it. It's just been the gambler in me, the excitement in me. Not every play's a gamble, but you're going up. You're putting your money on the line. So it's always been fun.
Yeah, absolutely. I mean, God, I think we all can really commiserate on the thrill that you get from doing it right, from having all the pieces connect, and then the hurt of getting it wrong. So I really, and this is something I think that everybody should ask whenever they start a conversation about the markets in general. And the question is, so what type of trader are you? What type of trader do you consider yourself? Let's start with you, Patrick.
So I'm primarily a flow trader. I trade off options flow. I don't really trade commons. I use commons as more of an investing tool. Not saying that I won't trade commons if there's no options available, but primarily options flow, going with the momentum. And then I sort of kind of base my trade length off what I'm seeing. So right now in the options world, very indecisive, short term, weeklies, 1, 2, 3 weeks out. That tells me big money is hesitant. They're nervous about something, and I think we all know what that something is in September. Is my guess when it's happening. But that's just my style, and it's worked out really well for me. And I still do the DD, Alaine. I mean, we've had those conversations as well. I'll still get down in there and do some DD and all that. But I'm primarily on the options flow.
That's deep. So, and like, how much do you consider? I mean, I know you consider news and catalysts. Like we've talked every time there's an OPEC meeting, we have a conversation. How do you weigh that against just watching market flow and consumer demand, basically?
So I do think there's some psychology to it for sure. When you're looking at those news events, and it's sort of, when I first got started looking and factoring in news and catalysts, I didn't necessarily trade them right away. I was always watching and looking at the price action, and you can see that now. You saw it with Roku. Roku looked pretty good, and then with the news of with the news of what you saw with Netflix, I don't know why anyone would think. Again, in hindsight, it's always easy, but I don't know why you would think Roku is going to blast off when you saw Netflix, the big streaming powerhouse, just fall after earnings. So yeah. I think they're important, but I'll also say options flow can precede news. Someone might know something before the news breaks. So I kind of look at options flow a little bit that way as well, sort of someone peeked into the future somehow.
I want to talk about Roku so bad. just I'm sorry, Mando, just real quick. Like, do you guys truly think that Roku deserves the 10% pullback that it's basically taken after earnings? I mean, of course we expected slower growth, but they're still showing the ability to grow revenue per user. I mean,
Right.
I think that's the big number here. Like, this is a solid company. I mean, are you buying the dip? Sorry.
I can tell you I own puts on the dip.
Ooh.
And they printed very well for me. That
Yeah.
was definitely a triple digit bagger.
Yeah.
But I will look to get calls on the ride up when we reverse, because I don't necessarily think that sell off was partially a good response, but partially an overreaction. We've talked about that before. Those news catalysts are great, but if you watch the market overreact, for traders like us, you just sit back, wait for the bottom, wait for everyone all the scared money to be out, and then you just like, all right, I'll take that. Thank you very much.
I'm telling you right now, I am licking my lips staring at Roku. Like, I can't wait. Honestly, this thing is a juggernaut, and it's so lame because it's terrible to be like, man, I hope the Delta variant really kicks in so we can get the full COVID rotation going in. But like, hey, I wouldn't be mad if it did. Sorry. Let's go to you, Mando. So what type of trader do you consider yourself? Oh, you're on mute.
I've totally gone through a transformation as a trader. Like I said, getting started really as a trader about last summer. I was really into the small caps and SPACs. I was riding those things for quite a while. But then, as everybody knows, February came along and that money was no longer printing for everyone. So I had to make that adjustment. I was working full time at the time. So, during that, I didn't trade much. I was holding a few bags, but I really was, learning throughout that time. I was really just searching anywhere on the internet for, other people's strategies or techniques that they may use. Now, I met Pat. I learned a lot from him about flow trading, and I would predominantly consider myself a flow trader at this point. Just from over the months of talking to him every day. I mean, now I'm starting to feel like I'm picking up things, not only that Pat are saying, but I'll shoot them to him and he'll say, oh, wow, good eye. So I think, overall with the podcast, I think it's cool because, I'm more of a newer trader, whereas Pat's got years of experience. And, I ask him those questions on Clubhouse every night. Those are the ones that are going on the podcast. So it's cool in that way.
Yeah, that's so interesting. So when you guys, and this is because don't get me wrong, do I love options flow? Like you gotta love it. You got to pay attention to it. This is a question that I've actually always wanted to ask somebody who actively does do it. And the question is, do you guys pay attention to Darkpool data?
Yes. We were on the phone last night talking about Darkpool, Amazon data. We were talking about
For those who don't know, can you explain what Darkpool data is and just like kind of that thought process?
Sure. So Darkpool data is basically private transactions negotiated by market makers, big banks, hedge funds, institutions. Me, Alaine, and Mando don't do Darkpool as much as we would love to. We're not even there yet. But yeah. So they're private block trades basically negotiated, and they have 24 hours to report them. They don't tell you if it's a buy or sell. So let me just, a lot of people will try and dig into it and go, is this a buy? Is it a sell? I've even fallen into that trap before of, oh, it's bounced off this, so it was a buy, or it broke through this, so it was a sell. And it's not really the way you should look at it. They really are acting as support and resistance lines because it's big banks making bets. Like, for example, if you notice on Amazon's big sell-off after earnings, I don't know how many people saw this, but there's $1 billion, $1 billion with a B, Darkpool print. Well, you didn't know if that was a buy or sell, but we know now. I mean, it's very clear what that was. And what that also tells me too is I've paid attention to the Darkpool prints on Amazon since, and they're building up what could be some pretty significant walls there. Now, we know Amazon's pretty strong, but when you see that, it's basically Goldman Sachs, JP Morgan, Morgan Stanley telling you, you got to break this before we get back in.
Yeah, absolutely. And I mean, so can you give me the bear case for stuff like this? Because I've known this, right? Oh, sorry. Let's go the other way real quick, if you don't mind me asking. So where do you go to get this Darkpool information? Because you can't find it anywhere, right? Like you have to download another program. I know a lot of people pay for private services that do this.
Right. So Mando and I actually we made a deal with the market gods. They deliver it to us every day, free of charge. No. So I actually am an affiliate with Black Box Stocks. That's where I get it from. They've got a great Darkpool program there. There's also a few other tools out there, Flow Trade, Outflow Algo. But basically, a lot of the options flow tools will include Darkpool data because they can kind of go hand in hand. You know, you can use them both. So there is typically a premium for them. But it's also, I think, worth it. It depends on, you know, if you want to stay with it. If you're going to be an options flow trader, then, you know, Darkpool is probably going to come into your life at some point. So understanding it and learning how it works is really important. But the main thing I'll say is there's support and resistance. It's an easy way to kind of find those in the stocks you're playing.
Yeah, absolutely. So kind of just to go to the show real quick. So what inspired you guys to start a show? And like kind of what's the premise? What can people sort of expect if they tune in and listen to you?
Yeah, I can go on this, Pat. Yeah, so pretty much, I mean, we do this like every night. Like we have a small group of people we jump on Clubhouse with, and, you know, we just talk about, you know, our watch lists or where we think the market's going tomorrow. So ultimately, you know, when we were thinking about doing something like that, we were like, you know what, people could probably learn just sitting in here. Like I said, we have a lot of experienced traders that we are in those clubhouses with. So, you know, there's a lot of valuable information for people to pick up on. And not only, you know, maybe technicals, but also these, you know, these big options buys that we're seeing or the dark pools that we're following. So, like I said, I mean, we're doing this every night. I'm trying to get as much info and learn as much from Pat as I can. And, you know, on Twitter, you know, over the past couple of months, you know, I've been hopping in and out of different streams and stuff like that. And, you know, I always get a pretty warm reception. So I figured, why not, Pat? We can do something cool about this and, you know, hopefully help people, you know, get a better understanding of the market and, you know, make some money. Ultimately, that should be everybody's goal, right?
Absolutely. And I guess I wasn't planning on doing this now, but hey, so where can people find this? What's the name of it? Like what platforms are you guys streaming on?
Sure. So the name of it is the Flow Bounty Hunters. You know, Mandalorian Bounty Hunter, OPT Flow. That's where the flow comes from. We thought real long and hard about that, as you can see. And right now it's on Podbean. We've got it pinned on the top tweets at both of our Twitter handles. But as we get, you know, just a little bit more comfortable with our editing and stuff, we are going to branch out and put it on, you know, the bigger platforms, the Spotify, the Apple, the YouTube. Like this week, we'll actually, last week was just audio. This week, we're going to have some visuals because some of the feedback we got was, you know, hey, where's visuals? We can't, we're newer traders. When you say it's breaking through this resistance line, I can't visualize that. And Mando and I went, oh, okay. So now we're going to have visuals. So this week, there'll be a whole visual.
No, that's awesome. I found a similar thing, and we kind of both started very similarly, just going on Clubhouse and enjoying talking about it, and then looking for an avenue to kind of increase our capacity to talk about it and to share information, but also to really talk about it, right? If you want to talk trading with people and you're not looking at a chart, then what are you talking about? Or are we doing these 15-year Berkshire Hathaway trades or 33.5-year Berkshire Hathaway trades?
Yeah, no, I really missed those morning sessions with Stockhouse View. That was, you know, when Pat and I first really met each other on here. He's like, hey, come on in and listen and learn. And it was awesome, you know, just for an overall, like, set the stage for the day for the market. No, it was really, really good.
Oh, thanks, man. And I kind of want to start doing them again. It's just I've been really busy, so I think we might have an announcement about that coming up soon, but we'll find out together. If I do, I'll definitely announce it here. And this is something I kind of just want to say about like Darkpool data, or maybe even just to play the bear case, because that's my thing, right? I don't pay attention to Darkpool data at all. I do know what it is. I even in some ways like hear about it because you can't help but hear about it, you know, if you trade options and are in that type of community. But either I try to like take into account fundamentals, and I think like that is what these large banks are doing in a sense, right? That's what these hedge funds, that's what they're doing. They're doing DCF, they're doing modeling, they're trying to make it, does this business make money, right? That's what they're doing. They're not maliciously trying to trade or hurt somebody. They're literally going where the money is. And so it's like when I see the growth trade completely outperform, yet we also know that reopening is happening and people are leaving the house. We know that inflation is like stayed because of the CPI report. But regardless, I could see a deceleration of the growth trade to, I mean, is sideways the new down? Right? Like things aren't necessarily going down, but they certainly are trading sideways, and see somebody say, hey, okay, you took a large put on Amazon for whatever this level. But that wouldn't make me, the trader, fundamentally bearish on something. It wouldn't mean that I would have to play puts on it because I know Berkshire did or whatever BlackRock did. So I guess I'm wondering, like, isn't there a world where this Darkpool data is insignificant to your trading plan?
Absolutely. It's an indicator. That's all it is. Darkpool data, flow, Bollinger Bands, moving averages, they're just indicators. And whether you want to factor it into your trading style or not, that's purely up to you. You know, like some people look at flow and Darkpool and go, you know, that's just witchcraft, that's voodoo, it doesn't make any sense, it's manipulation. And you go, oh, okay. And then other people trade off of it. So I mean, I definitely agree. Like for the first part of my trading, when I started, you know, trading all those years ago, like Darkpool data wasn't available, flow data wasn't available. Like those things just didn't exist. And so, you know, for sure you can trade without it. I just think it depends on your style. You know what I mean? And you know, if you're a data-driven person, a data-driven trader, then that's going to be helpful. If you're fundamentals, if you're TA, I mean, some of the traders I talk to every day, she's going to kill me, but I'll shout her out. Delta Gamma Queen on Twitter. Her and I talk every day about stocks. It's fun. Her and Mando talk as well. We all talk, but she thinks Darkpool or she calls all my flow stuff gamblers because she's a TA trader. So you know, we go back and forth. Sometimes I'm right, sometimes I'm wrong, but there's definitely a world where you don't need it to trade. You don't need it to be a successful trader at all. It's a tool that you should consider at least looking at and adding to your toolbox. If you don't play option flow is also useless. If you're swinging small caps, you know, commons all day, what I talk about and what Mando talk about is not, you know, necessarily going to be for you, but maybe we'll perk your interest on it.
Absolutely.
Yeah, and just to add on to what Pat was saying, it's definitely not a surefire thing. I mean, every you know, large order you see isn't going to automatically you know, be the next runner or something like that. It's just, you know, we've kind of you know, obviously I'm taking some of it from Pat, but in this strategy that we're using, we're trying to see those, you know, repetitive or huge buys that it's undeniable money, the money that you're looking at and saying, like, you know, why are they doing this? You know, there's a few of those where we're just like scratching our chin. It may take us a couple of days to, you know, kind of get our feelings out about it. You know, discovery. We're digging deep into, you know, the darkness of the internet, trying to figure out why are they putting so much money on these one strike, you know? So again, it's really not a surefire thing, but sometimes you can get a good indication on, you know, where the stock's going to go just based on how much money these people are throwing at it.
Yeah, absolutely. And just so everybody's above water, I'm definitely a momentum trader. He uses a lot of fundamental analysis to pick the stocks and a little bit of TA to enter and exit. I would describe my style as a 1-inch punch. Punch.
If you knock him out, though.
And my average trading length at this point has actually extended to probably about 5 days at this point. I'm definitely swinging more than I'm taking extremely short trades because I've been trading VIX. So it's like I just need to give her some time to cook, and she's been giving it to me. Besides these kind of short-term, more momentum-based sector trades, what would you say your average length of trade is? And then we'll get to the market. I do think this is kind of important. Mando, how about you?
Yeah, I mean, I typically day trade, especially now. It's been a little choppy recently for you know, swing trades, but yeah, I'm typically between, you know, a day, maybe at most 4 days, 5 days. But going to your point on the VIX, we were joking around about this. We were saying, you know, like Friday, it seems like that's a perfect hedge, you know, with all the news, like, is COVID coming back? You know, they could drop that news on you at any time. So, you know, we've always been talking about, you know, what are we going to hedge with for going into the next week? And it's just funny you brought up the VIX because we were talking about that.
Yeah, I mean, hey, every time I see the S&P at all-time highs, I know what I'm grabbing a big handful of. I've just decided that diversification makes a lot of sense. And I've extended my time period out, and it's just like, hey, when growth decides to wake back up, like I'm in. I mean, I'm not in like Kathy Wood's in, but I'm in nonetheless. But if we're gonna do the cyclical thing, I'm holding hands on that too. And if all else fails, I've got a hedge, like because I'm not gonna lose out here. But it really is like based around this like secular thesis based trading. Patrick, what's your average length of trades? You're more of a day trader, huh?
Yeah, I'm definitely more of a day trader in these markets right now, especially with as choppy as they are. So day trading for me really works out. I'm heavy cash, but at the same time, again, I'm a flow trader. So I've seen some flow on some things that on my strategy and my rules, I'm buying time on. So, but it's got to be right. But in this choppy market, just up and down, to me, day trading, scalping, it's the safest way. I don't want to wake up tomorrow and find out, whatever new Delta variant or whatever's coming out in the market tanks.
I want to challenge you, Patrick. I don't think this market is confusing at all. I think it's really, really simple, and we can prove that by going to the charts.
Okay.
So, you guys ready to take a look at some charts?
Sure.
For sure.
All right, let's do it. Yo, I cannot see these charts, but we're gonna give it a shot anyways. All right, can you zoom in for me? And let's take her on a weekly chart. Okay, so we're looking at the S&P 500. When I look at this long-term trend, especially holding at that 20-day moving average, I just see something that's long-term bullish and showing that up into the right direction. I think that we've seen a pure, strong recovery and people buying, like the market doesn't dip. People buy the dip. It's not even a question. We're not seeing prolonged breaks to the downside at all past 2 standard deviation. It's just not happening right now, or it has not happened in our recent history from our March lows. As a matter of fact, we've seen more and more strength as we move towards these high base breakouts that, don't get me wrong, they're not holding. They're not incredibly powerful breakouts to just hold forever, but we are absolutely holding in this positive trend direction from the top 500 companies. And this isn't tech, right? This is everything. So when I think about like the easiest bet in some ways to take, and I mean, if we're looking at like, so we're kind of hitting, I mean, it's a green week so far, but if we go back 2 weeks, right? We had a breakout that ended with a red doji. And I always say, like when reading a chart, I look at these dojis and they say everything I need to know, right? We had the breakout, we had that green energy, we had the doji of hesitation, and what did we have followed after that? A nice, humongous green candle. For me, regardless of whether or not the Delta variant goes crazy, whether or not we know tapering is going to happen. I think that's pretty much baked in at this point. And what's going on with the infrastructure bill even doesn't seem like it's able to stop the profitability of these top 500 companies. What do you guys see when you look at SPY?
Man, do you want me to go first?
Yeah, go ahead.
Okay, so Alaine, I agree with you there. Like we're definitely in an upward to the right trend for sure. We're definitely holding above the right moving averages, whatever the moving averages the individual likes. I would also say, if you look at the volume bars, though, volume is decreasing. I get it's summer, but the volume, that strength does seem to be dying there. We've been in the oversold, extremely oversold range for months now. And we also haven't had that SPY pullback, 10%, since September of last year. I'm not a bear. I'm not a bull. I trade what's in front of me. Mm-hmm. But when I factor in all those things, I would go, we've got to have something give and pull back here. That doesn't mean the market crashes, we go into a bear market and everyone needs to go buy puts. It just means we're going to have to breathe on that S&P, in my opinion. And if you look at, I trade a lot of fibs as well. When I look at my technical, we are trading above the 1618 fib level in the channel. And that doesn't mean it can't go higher. It certainly can. There's nothing that prevents it from going higher. But I think when you're looking at the size of the candles recently, you look at the size of the volume bars. Yeah, we're slugging it upwards, but we're going to have a little bit of a breather just to sort of reset. Because just to be clear, at the end of the year, I think the SPY is crushing all-time highs again. Like I think we're well beyond where we are now at the end of the year. But I do think we got to reset. Oh, I think we're higher.
Okay.
480, 490. in all honesty.
Okay.
Yeah.
Wow. Whoa, dude, that means
Yeah.
a year. It's going to be a strong year. So here's my question. Where is the pullback going to happen? Is it happening? Is Apple, are we going to see FANG pullback? Because I don't see that. Maybe potentially stagnated on growth for sure, but not a pullback, right? Or, I mean, is it going to be a small caps pullback? Because I think they're already like kind of trading within a healthy range that we've seen, right? We talked Russell. Is it going to come from, I mean, the cyclicals? I think energy is at like a pretty good place, to be honest. Like, yeah, for sure, we might see some pullback, but I don't know that that's pulling back the market. Where's the weakness supposed to come from, Pat? Like, because I'm with you. I used to be one of those same people, and now I kind of question that ideology of waiting for this 6% to 10% retracement. I'm not sure that that happens in the way that, especially on a macro level. And sorry, because I'm talking a lot, but the macro idea that everything pulls back at once and creates this big SPY pullback is the thing, is the narrative that I maybe am starting to become against.
So I can see that. So a few things to answer that. So one, we have a 10% pullback every year. It's baked in there. Why it happens, I'm not a predictor of what it's going to happen. I can give a thesis, which I will do, of what I think could pull it back.
Yeah.
But we have this pullback every year. Everything's got to just exhale. You know what I mean? Yeah. So is it all at once? And the whole market crashes? No. But I do think, and you're starting to see it. I think you're showing some weakness in the FANG names, for sure. I mean, if you look at the breakouts, they've all had pretty good breakouts. They're all touching all-time highs or getting back to there, and some of them have traded sideways. But I think you'll see a rotation out of SPY and QQQ for a moment. And I think when you see that moment happen, that's when you're going to see Dow and IWM take off. And I know IWM, we can talk about that because that's been ping-ponging back and forth for months now. But I do think, quote unquote, it's going to be small cap season here shortly.
Really?
And then I think everything switches back and you see the SPY and tech just do what they do, which is just run the place.
So, I mean, hey, can we pull up the Qs? Thanks. I mean, and I think that a great chart to kind of look at this in correlation with, which we probably won't do, but is like the crypto market cap, like overall, and just direction, especially into Bitcoin specifically, and people's risk appetite for more speculative growth trades. But like, I guess the thing where I'm wondering is like, so let's just talk about, we can talk FANG, right? Like, do you see Apple doing some sort of large pullback after they just posted record profits? Said that COVID, basically the Delta variant, basically did nothing to their ability to be profitable. Every single person I know has the new iPhone. Like, I think that that pent up demand thesis really played out specifically in some parts of tech, are staple parts of tech, and Apple would be one of those. Or if we look in like semiconductors, which is showing some weakness. Right, but it's like, do you not buy the dip on semis? Like, you not buying the AMD dip?
Oh, I've bought the AMD dip. I've traded the AMD dip.
I'm two hands into this AMD dip,
and
I wish it would dip more.
Yeah.
I pray every night. I pray that AMD dips more, just so I can unload my entire account in there.
No, so I do think you're seeing some things just really show overheating. They've been in extreme overbought. And again, something in overbought can stay overbought. There's no rule that states if it's overbought, it has to come back down. It typically happens, but it's not the rule. And when you look at just the bullish run we've had, yeah, there was what was it? February was the real choppy in the beginning of the year, or April, or
February was pretty.
It was like late February.
Pretty choppy, and everybody had a pretty rough March.
Right. Oh, March. Yeah, that was the time frame. So like,
I had a pretty rough March too.
Yeah. Oh, I remember. We were on Stockhouse U. We were doing treat yourselves, but we were lying about it.
I don't lie about my treat yourselves.
No, I don't either. But no, I just think you're going to you're showing signs of just things being overbought. You're showing signs of things just being exhausted. That doesn't mean the bull case is over. I just think it means like everyone needs to go on vacation.
Yeah.
I think just SPY needs a break. SPY needs to go to Cabo for a week and get some sun.
So here's my kind of follow-up question to this, right? Because you noted volume, and I mean, now you're talking my language, man. Price action and volume, that's the indicator. Those are the indicators I care about more than anything
Right.
else. And it's like, so what do you think happens when the volume comes back up September, October, November? Like, what do you see happening there? Because there's the potential for that pent-up demand thesis to continue to play out. I mean, yes, we are seeing big bank money, and people aren't diving into speculative growth, for sure. Not a question. But do we think that they're just going to totally abandon these names? I'll
I
ask
don't
that
think
question
so.
and kind
Yeah.
of keep on going.
Let Mando go. No, I'll let Mando go because
Yeah.
I think the opposite on this.
Yeah, no, Alaine, I'm with you on this. I mean, just going back to what you were talking about before, like, do I think SPY does need to cool down? Absolutely, but I don't know where it's going to come from. You know, I don't see FANG slowing down. I mean, I've been playing SPY bounces off the 20 MA for, you know, months now, and it's just been, you know, free money pretty much. So, you know, when it happens and I do get hit eventually, it breaks through, you know, it'll be worth it. But up until this point and going forward, I just don't know where, you know, where this pullback is going to come from, because I don't see those, you know, big name companies really falling off or going anywhere anytime soon.
Absolutely. I mean, and so let's kind of continue into this world a little bit, because I mean, Patrick, I very much so miss talking to you, man.
I know. I miss
We used to talk oil every single morning for months, and it's like the cyclical trade. We love the cyclical trade. We're all about the cyclical trade. And I used to say like that, you know, we're doing a sector rotation. And I guess that is the nomenclature for what we're seeing in some ways, where it's like, hey, when financials, energy, industrials, basic materials start to pull off, like that's a rotation. But I don't know if I want to call it a sector rotation anymore. I'm going to coin the new word COVID rotation. I think this is the standard COVID rotation, man, just coming back into effect. And like in some ways, I think this is the balance. Like, of course, we can come back and touch the 20. Not even a question. Like, we have to pull back. Stocks don't only go up. But kind of in terms of that weakness, like, I mean, we saw copper hit an all-time high, smashed completely to the downside, and here we go on the recovery. Same thing with all of our materials. And we look at the demand's not going any effing where, right? And then on top of that, the inflationary piece of, hey, things are getting too inflated, people can't afford it, that turned out to be fucking bullshit. So when I think really strong about like where I see the overall direction go, and instead of this rotation, I mean, I guess I'm not seeing it as a macro trend anymore, but I am seeing it as kind of what a lot of people have termed the stock pickers market. And we've been picking those stocks, right? So how are you feeling about kind of your cycle trade? Specifically, let's go energy, materials, and industrials, or you could go financials. I don't care. Pick your favorite in the cyclical trade and tell me about it. Let's start with you, Mando.
Yeah, just overall, the energy sector, it's been super backwards in my opinion. I mean, we were getting news that, you know, leading up to, you know, the Iran deal, it fell through. Oil didn't really respond the way that, you know, I would have felt it would have responded, or even when, you know, the OPEC meetings, when they called them off, you know, and I understand the market didn't like that, that indecisiveness. You know, it didn't really know what to expect. But, you know, when we weren't pumping barrels of oil, you know, I had a strong feeling that we were going to fly. You know, WTI touched like 76 or something at one point, and then, you know, by trade open, I think it was, you know, the July 5th off day, and then July 6th we open it up, and, you know, it's plummeting. So, you know, it's been very backwards and strange, but it did bounce back pretty well. And I mean, XLE specifically, it's held, you know, that, you know, 48 to 50 range pretty well recently. I mean, it really hasn't taken that next level step, but, you know, day in and day out, they're still talking about, you know, oil and gas prices. Specifically today, I know I got an alert about Walter Bloomberg sending something, you know, regarding, you know, they think that the gas prices are too high and stuff like that. So energy is a tricky one to me. It's been pretty backwards, in my opinion, over the last couple months.
Oh my God, Patrick, you know I want to talk because you were one of the main people, man, who were telling me oil $100. And I said, there's no way on this earth, unless aliens come and they need to power their getaway vehicle with oil or something, there's no way to go over 80.
Right, but we also did say $100 next year. I didn't say $100 next week.
Okay.
Yeah.
So we're looking for next year. I mean, you know what?
You guys got to make a bet.
That's
No,
your time
I
horizon.
think
I'll take it. But
I think we have. Chris probably.
I thought it
knows
was
that.
summer, man. I thought it was definitely $100 this year by summer, and I was just saying there's no way. And it's not because it's not humanly possible. But we did have the Delta variant coming and scaring people, looking at Spirit Airlines, closing all those flights and looking at, I mean, we've seen airline prices actually go down, right? And it's less flights, less people, less gas consumed. We're seeing industrials take a step up for sure. But it's still not looking to be this full steam go ahead sort of situation. I think that you were looking for to hit that number. With that said, I have a lot of faith in the yield trade, and I'm back with you after a pullback. Like I'm actually pretty happy to stay until 70.
Yeah, and you were big on the pullback when we were talking about that all those months ago. And
Yeah.
I would say, I remember when Chris and I were talking about it, we were saying it'd be 80 by the summer, which I was wrong on. I think we hit 76. I was off by $4. So
yeah.
Give me a little leeway with $4. What's $4 between a barrel of oil and the friends, Elaine? Come on. But no, I do think you will see oil go higher. I think you're going to see, demand will continue to increase. Supply is going to continue to decrease. You're seeing U.S. producers, want to produce less and producing less for numerous reasons. Investors changing to the EV world, et cetera, et cetera. So I do think we will get there. Maybe it's not till January or February, but I still think it's going to climb. And eventually, with the Delta stuff, the COVID stuff, I'll say, I get it. COVID's there's a lot of information out there about it. I think it's the safest way to word it, and everyone's absorbing the information and doing their best to understand it. And I do think, though, eventually, just based on just history and human nature, we'll just forget and move on. I mean. I don't know about you. We just do. We're not good at, maybe people will care for a little bit longer, and you might see some people still wearing a mask if they go places. But I think eventually you're just going to see people just going back to normal and forgetting that this even happened. I mean, SARS, remember that? And, Ebola.
Yeah,
but
that? SARS didn't have it. So I think there's seriously 30 ICU beds left for all of Dallas right now. Or sorry, Austin, right? For people down in Florida, it seems, I don't know. I'm with you on a market level, but maybe not on a market participant level.
Yeah, I could agree. I could see that.
I heard that, and this might be completely misinformation, but here we are. I heard that in San Francisco, they're doing a lot where they're actually literally checking people's that you've gotten vaccinated. I have an app on my phone just for that.
Really?
Yeah.
Either way, I'm sort of with you.
Overall, I don't want to be so contrarian. I'm actually with you on this one. I think Delta doesn't matter. I think I pray for a dip because even if we do get a dip based off of lower numbers of people buying tickets or lower whatever, I just don't think this changes demand at all. And thusly so oil can continue to do what it needs to do until we get every last drop out of everything apparently. How do you guys feel about CPI numbers? And let me just start off with the quote. Is CPI just for boomers? Does anybody actually care? Does this matter?
So I think inflation is interesting. So I've read a lot of some of institutional research things that I subscribe to, talking with other traders, listen to what they're saying on TV and everything and other news articles. And while inflation might be transitory in the sense of the actual inflation rate, I'm not sure the prices are transitory. So great, inflation might might boom for a second, then it's going to come back down. But I'm not necessarily sure that means your shirt that you're buying, the hat, the cell phone, based on the inflation there, I'm not sure those prices come down. So that's the part of inflation that has me really interested right now to see, when they say transitory, well, all of it or parts of it are transitory, because that's going to have a bigger impact on the long-term effect of it.
Well, definitely some parts of it are transitory, right?
Sure.
If we talk about the price of a used car, that just has to be transitory. They're not going to stay so inflated for so long. And then we're seeing stuff like Ford's numbers for they sold more used cars than new cars in this past quarter, right? So Although, and we're also seeing, I mean, the jobless report came out pretty strong actually, right online, and we're also seeing growth in the average wage earned per hour, right? So as long as that grows along with these inflated prices for consumer services, with women's dresses, and whatever the core things that are indeed becoming more inflated, I think that there's a balancing act, right? Inflation always gets put as something that's purely negative, and I think that's what the fear mongering is about, the negative sides of what hyperinflation or stagflation could be. However, currently it seems like we are seeing kind of that matched with wage growth, and because there has been a lack of jobs, a lack of employees in specifically leisure and hospitality, we've seen an upward pressure on wages on some of the lowest parts of our, whatever, some of the entry level, like beginner jobs. I saw $18 to work at McDonald's now, you guys.
Yeah. No, yeah. I remember I live in New York, and I was in upstate New York, and gas stations like mini marts, like Walmart, things like that, they literally have job applications just on a little kiosk in the front when you enter. They're in desperate need. So it's just crazy to see how how many people at that point, at least, we're not getting back, but we get good numbers. My biggest concern really with all of this is just with schools opening up, the infection rate. I haven't looked at anything updated within the last day or two, but if kids are getting sick from this, that might be a problem. I mean, they're going to have to stay home when they're sick. Their parents aren't going to be able to go to work. Are they going to shut schools down? That's something that I think could be probably the biggest thing that's going to inhibit us from just continuing on this tear.
Actually, that's a really great point, Mando.
Yeah.
I mean, what I think of, because you're right, there's a huge part of the population. Childcare was another thing that completely inflated. And the average age of your average school teacher, specifically for like elementary K through 12, like they're not a young group. I know when I was teaching, I was like one of the youngest teachers I'd ever seen at that point, and definitely professors as well. But they're definitely enforcing a lot of rules for teachers as well. So there's the potential to see like separation, increased safety regulations for schools very specifically, although a couple of states have already said they don't care. They're going to let every school district do what they want. But these teachers are in unions for a reason. When there is a teachers union, because I know that's not true for every state as well. And I know these unions are definitely fighting to keep their workers safe, right? And that's like what OSHA is all about as well. But what I'm hearing is CPI is for boomers, and we're going to continue to uptrend. Delta variant's way more dangerous, and I'm gonna wrap on that in some ways. So kind of continuing to go down through the market and things I've been paying attention to. How do you guys feel about China? Have you been taking the trade on any of these Chinese companies that have taken a beat down due to regulatory? About the BABA trade. Let's go with you, Mando, or Patrick. I'm not sure if you guys are actually really sitting in China or me.
I took Bob on the way down. I think it was like 2 weeks ago, I want to say. Yeah, I played Bob on the way down, and you know what? It just kind of goes back to what I was talking about before, where it's like I'm not extremely comfortable holding things for a long period of time. So I do want to be, in and out of trades. And, when a situation presents itself, I'm just going to take it really quick. If it doesn't go my way, I'll cut it quickly. But it just as a matter of like holding Chinese stocks, or even, thinking about going long on some of these things, at the moment, it's really not for me. And Pat, I think you feel the same way about that, but I just don't really feel comfortable like going long term really on anything at this point. And it's not for, any other specific reason other than what are they going to say on the news tomorrow? Are they going to strike so much fear or say something that pushes the right button that kind of creates this like artificial pullback, or are we just going to have it naturally? I don't know. So in the meantime, I'm kind of just going to play it safe and not do anything crazy.
I get that, and there's a part of trading to your style, and sticking to what you guys know best, which is very clear. I mean, when I think about, so Chinese regulatory pressure is serious, right? Their ability to take things out of the market or stop the growth or add to the growth of any particular company that's based in China is huge. Their support on NEO, their support on all sorts of renewables is a big deal. Same thing with them rescinding their support for like giving people who are doing crypto mining companies energy rebates, right? Like that had a huge effect on a global scale. But when I think about the globalization of the world, specifically in e-commerce and like social media and stuff like that, I really do wonder whether or not that fear, I mean, I know the fear is valid, but I don't know that that stops me from buying a dip. So I also have been playing Baba. I mean, I'm pretty consistent on playing her. I mean, Chinese EV has just been like out of a lot of things. I mean, I'm more bullish on Chinese EV than I am on Tesla. Like just point blank period when I think about growth potential and prospects versus the amount that it's going to cost me to get in. Pat, how are you feeling about Chinese regulation?
On a global, really quick on that EV thing, Chinese EV, on a global scale or specifically them branching out into the U.S. market?
I don't even care. China has the largest EV market, so no, I don't know. I mean, when I think about NUE, I don't care if they branch into the U.S. market. At least for right now, like I'm just thinking about their China growth, to be honest. Oh, look, there you go. Yeah, hey D, I'm so bullish on NUE. We're seeing the profit model continue to grow. I mean, are we seeing a stagnation in terms of deliveries? Absolutely. For the last quarter, that did happen compared to the growth that we see in like Li or some of our other small Chinese auto. However, like what I'm looking for in this next earnings report, and as we continue to see our quarterly reports come through, is their ability to monetize their battery charging stations, which so far seems extremely bullish, especially with the pairing of oil and gas companies being right behind it, their ability to upsell just based off of premium consumers, which is the market that they're going for. And also, I mean, as long as they continue to have the backing of the Chinese government and not face the same sort of regulatory issues as a Tesla would, or as what we're seeing with like Jack Ma, or like I just don't see an allegation like what happened with Weibo. Like I just don't see that derailing any of these EV plays, especially as we're looking towards more conversion of internal combustion engines, as well as the infrastructure, right? Like so, part of why we know internal combustion is not going anywhere is because the infrastructure to support that it's one of the most robust things we've ever created in humanity, right? Like our energy system for automotives it's incredible, and that's why we're not going to see, even if every single auto manufacturer switches to only selling EV this year, we're still not going to see complete EV adoption or even like a large percentage of it because we just can't sustain it right now. But when I see the investment into renewables and batteries very specifically, and an infrastructure that can support renewable, whether it's these battery charging facilities, battery swap facilities or charging, I just know that the infrastructure behind these things is going to make them in some ways kind of like financials, too big to fail. We're not letting that happen. Tesla, I don't know. I mean, sorry. How do you guys feel about that? I don't want to just hijack and start talking.
No. So I'm bullish on a lot of the EV companies for sure. I'm more in the boat though where Ford, GM, the current names aren't going to die as much as people think they are. I don't think Honda, Toyota, Ford, GM just wither away, give up, and die. I mean, I don't see that happening. So that does make me a little. It gives me a little hesitancy on some of the longer EV plays. I mean, I like NIO, don't get me wrong. I think their cars are great. I think they've got great technology. But the variable there is what the whole premise of the segments on them, Lane, which is the Chinese regulatory. If they sour on NIO for whatever reason, I mean, we watched them sour on Jack Ma, over a weekend. Now Jack Ma has a little different history. Some might know he's a pretty outspoken dude. So, maybe the NIO CEO is different than that. But there's no telling what China's going to do. China can wake up tomorrow and go, I don't like NIO anymore. I like Li. And next thing you know, all that money shifts, all that, focus shifts away from NIO into Li. Now, the probability of that happening is slim. I don't see, there's nothing on my radar and people I talk to that follow NIO just as closely as you do, Alaine, that'll say, oh, that's even in the cards, but it's a possibility. So because of that, like I'm a little hesitant on them, but I'm also still super bullish on Ford being an EV play and GM being an EV play. And, and BMW and Mercedes and Toyota and Honda, and not necessarily meaning they're going to develop their own, but we saw with SPAC mania, all the EVs go public, and intellectual property is a very expensive thing to buy, but it can get you in the game very quickly.
Yeah, I mean, God, we're about to go down a rabbit hole if we just continue to talk EV subtleties. And Patrick, I agree with you mostly, right? Like I'm 2 hands deep in Ford, right? And I probably never let go, to be honest. With that said, when I think about growth prospects, I do think we just know that new technology and growth companies in emerging market, countries do better than they do in America, point blank period. Ford has had the #1 selling car since 1981. Does that mean that they make exceedingly more profits every year to balance that out? No, not necessarily. And the automotive business is one of the hardest to establish a company in. So already I know that the companies that are able to do that, it is an amazing thing, and it does take a lot of support. But it's the same thing about changing those market caps, right? Like we know that we're going to move towards EV, but do we know that Ford is going to get a larger slice of the pie than they already have been getting? And is that going to change their ability to stay profitable? Are they going to make it back? We know that these cars have less moving parts, so I doubt that people are going to be selling them at the same rate, just because of the maintenance needs, right? If you can truly just swap out a battery on these things and keep it going longer past it, I think we might be seeing more cars that hit the 1 million mile mark, right? Or 500,000, these things that you only see like Cummins diesel engines do. So there is a huge question about the profitability of our, old school manufacturers that I'm with you, man. They're going to do it, and they're going to do it better than Tesla. But in terms of being innovative, I mean, that's where we fault them, right? We know that they can copy and repackage manufacturing better than a company that's just starting, or arguably. There's an argument for why they could do it better. But there is no argument for why they haven't adapted and why they're showing a lack of ability to adapt to a completely changing time when it comes to regulatory pressure and rules on driverless cars, or when it comes to innovation on how we're going to move this battery technology. Why the hell is QuantumScape the only company publicly talking about building their solid-state battery? I mean, we kind of know that it's not SK Innovations isn't talking about that. I mean, we just keep hearing more and more about upgrading and refining their ability and refining these batteries, but we're not hearing about these leaps in thought process. And that's why I'm so bullish on NIO, to be honest. I was kind of bearish on the idea of battery swapping, but then it's like, wait, it's different. And I honestly don't want to wait in a line to charge my car when cars take 20 minutes to charge because they're slow, because they're not solid state, so they can only charge at a certain speed, right? Like when we look at the technology, we can see the need for innovation is there. It's very clear. And I'm seeing OEMs fail to innovate at the same speed as some of these new companies. And we know why.
I know, I totally agree with you there. Listen, has Ford, GM, have they, listen, and even the bigger names, if you want to pick the luxury names, has Ford, GM, Mercedes, BMW, have they all kind of dropped the ball on EV? Absolutely. Absolutely. They have dropped the ball on EV. My only other counter argument, or I guess, or counterpoint to what you were saying is they haven't needed to really switch yet because EVs are still expensive. I mean, I don't know if you've looked. I do every once in a while, but if you go look, the price of a used Tesla, a couple years old, 2019, 2020, call it sub 40, 30,000 miles. Not a ton of miles, not a little bit of miles, not that old of a car. They just don't hold their value right now. So when you're looking at Ford and them and you're going, well, why haven't they pivoted? Why haven't they pivoted? Infrastructure's not there. We just got an infrastructure bill. They're expensive. I don't know about you, but people right now are trying to get jobs, and buying a $30,000, $40,000 Tesla isn't on the top of their priority list. They might want it, but you got to be able to afford it. So I do agree with you. Like I am disappointed from like a sector or an industry leader perspective of why Ford and GM didn't take it more seriously. I mean, Tesla was creeping around for years. I mean, they weren't hiding it. They were a publicly traded company saying, we're coming for you. So I'm disappointed in them there, but I think they would look at me and go, I'm not sure the math is quite there for their size and their scale where they would make enough money. Now, if you look at Ford, though, with that Ford Mustang Mach-E, I forget the analyst who was talking about it, but he made a pretty interesting, correlation, which was when the Mach-E came out, you saw Tesla Model Y or whatever sales dip.
Yep.
And you saw basically an equivalent amount of money run into Ford. Now, does that mean everyone ran over? No. But that's a pretty interesting correlation to see. The second Ford drops something, the Tesla people, some of the Tesla people said, all right, I'm going to go to Ford. And I don't know if you've looked at that Cybertruck. Well, it's cool
a hot
looking.
pile of garbage, Patrick. You know how I feel about this Cybertruck. They can drive it straight into the dumpster that it came from.
I don't see many Cybertrucks going on work sites. I can't imagine a construction site covered in Cybertrucks as ugly as it would look even worse if it was Cybertrucks.
Imagine a government fleet of Cybertrucks.
Oh, come on, Alaine. Jesus.
I love the way the Cybertruck looks.
Nobody with a job does, though, Mando. That's the problem. Nobody who makes money the regular way is buying. I don't know. I don't want to say that, but it seems like it's influencers and I don't know, review people who are going to be buying that when an electric F-150 makes so much sense. Or the thing that makes the most sense, in my humble opinion, a hybrid F-150. Those things seem to just be it makes so much sense to have the option. I know so many people have EV paranoia, or what's it called? Sorry, battery range paranoia. That it's just like, look, I want to be able to get where I want to go. I want to be able to tow what I want to tow, and I don't want to care whether or not it's 40 degrees or 115. Like, I need my car to function. I didn't buy it as an investment in futility. Now, if you drive around the city, why do you want a Cybertruck? But I kind of want to keep on going real quick and just ask you guys. So how are we feeling about, because speaking of speculative investment, I think that's what I think about when I think Cybertruck, when I think Tesla, and we look at the stagnation in Tesla price as opposed to the rest of the EV, right? I guess two things. A, how much do you think EV will stand to gain as it's paired into the infrastructure bill? Both the one that I think they're going to pass, as well as the revised $3.5 trillion one that's probably going to struggle a lot more in Congress. But how do you guys feel about the speculative growth trade, or what are you trading along with this infrastructure bill and this particular catalyst?
Yeah, just going on the EVs, I would say I think they've held on pretty well price-wise, stock price-wise. For, some of them don't even, they don't have cars on the road yet or anything like that. So I think the fact that, people are valuing just the idea of their technology and, that new age of, electric vehicles, I think it's pretty impressive that they've held where they are. From the investment standpoint, for me right now, probably not. Do I trade them? Absolutely. But I still haven't gone long on any of the electric vehicle companies for that reason. Yeah, I'm just a little iffy. I think we're very far away, as you were talking about before. I still think we have quite some time before it's going to be a electric vehicle at every house. Even where I live, people don't always buy new cars. They're buying these used cars. Is it going to get to a point where we have to wait for a whole cycle of electric vehicles to come down in price so that everyone can afford those cars? That's just, a point that's kind of hung me up on going long on them overall.
I totally hear where you're coming from, Mando. I personally, when I think about this infrastructure bill, actually, let's go with you, Patrick. How do you feel about the infrastructure bill as it relates to EV, and then kind of what are you sort of trading alongside that news?
So I think some of the EV stuff might be baked in all honesty. I mean, we've talked about there's going to be this much for charging, this much for that. Not saying there won't be a little bit of a pop afterwards or something, but I think some of it is pretty much baked in, unless they add something that isn't already in there. But as for what I'm trading, I mean, I'm going back to just good old fashioned, American steel, American raw materials. I mean, I traded X, I traded NUE, I traded XCLF. I mean, Mando and I traded NUE. We saw
money.
Yeah, we saw the flow, and I printed that for 150%. I mean,
that was a 1.2 million on one strike, right?
Right.
Or something like that. Yeah, it was like, I wonder why. To me, that's like undeniable. We got to look into this. So I didn't even know what the company was.
And then
we love Nucor, Mando. We love Nucor over here. Cleveland Cliffs. This is bread and butter stuff right here for the cycle trade. Sorry.
That's it. Yeah.
Yeah. So I mean, That's what I'm playing with it, though. I mean, I do think you can have, some EV stuff in there for sure, but I don't know. I think it's a little baked in, personally.
So I think this is interesting, and I know Zeb's not watching, but we've had a guy on the show named Zeb. He's joined a couple of our conversations in rooms, and a couple of us so there's an EV company called Zev. It's kind of small. I believe it's American, and a couple of us just took some flyers on it because a guy we know, that was his name, and we're looking for, hey, sometimes you just want to put a little skin in the game on some things for fun. Zev up 56% on infrastructure talk.
Yesterday,
right. When we think about the American EV companies, they're actually they are up. Everything besides Tesla, to be honest, took a decent bid on infrastructure talk. Bill talk, right? I'm with you though, Patrick. When I think about what I trade associated with this, it isn't EV. I'm not going speculative growth. Much like you, I went straight to materials and commodities. Right. And I probably continue to see that trend. I mean, we loved the copper trade coming up, and I don't see a reason for it to stop. I mean, when we look in the area that was like one of the weakest areas while we watched the growth trade, it was miners, right? Yeah. And we're seeing miners catch a huge bid. They're overflowed with both money for new projects as well as making profit off of the projects that they currently have with refining. With refining some of this metal, specifically when we think about tin, copper, steel, right, are just catching an amazing bid. And I think that they will continue to as we see this infrastructure play out. Because no matter whether we're building hospitals, whether we're building housing for the homeless, whether we're revamping old water lines, whether we're going to be dealing with creating a new energy grid, it's going to take metals to run that energy and run that material around. So also deep in there. Yeah. How are you guys feeling about crypto? With them talking about taxing crypto, specifically proof of work miners inside of the infrastructure bill?
Mando, you take crypto. You're the young gun on the team.
Yeah. I don't know. When it first kind of started running and going crazy towards the end of last year, I was all in on it. I thought it was great. I bought a ton of it. I made, solid money off of it, but that's another one where I feel like an investment right now is a little scary, just because at any moment they could really just drop that. Yeah, we're going to tax it, or we're going to go look forward to, putting out these outrageous taxes on it. It's just really not for me right now. I know a lot of people who successfully trade it, but as an investment, I'm just, on the fence about putting in, especially for like Ethereum or Bitcoin. It's a lot of money too. I mean, I know you don't have to buy a full one, but still, it's a lot of money to be invested in something that you really aren't sure is going to, hold up without any, government intervention.
That's kind of a deep way to go about it, for sure. I've been one who preaches the regulatory pressures and fear on what could happen, very specifically with Bitcoin at this price point. It's like it needs government support for, I don't know, I think disciplined investors to want to dive in at 46, 47,000, whatever we're sitting at right now. However, I personally, man, please let Bitcoin get up to 50, 60,000 so I can short it right back down to the hell that it came from. This is another one. I don't know, but I've been I've been pretty bearish or like middling on Bitcoin price, whereas I'm pretty bullish on Ethereum price, or even like scaled V2 solutions like Matic, or like even looking to things that have a purpose, right? Like there's some smart contract blockchain capable coins that actually serve some value. And like for those, I don't know that I'm so worried about government regulation, because I'm not worried about them reaching a market cap where they need to be heavily regulated, or they're going to account for some large percentage of GDP where it's definitely scary. But I am with you, Mando. In terms of the overall market, we're still waiting, and we're waiting very diligently to hear about what the U.S. government has to say, specifically on taxing proof of work validation tokens, right? Or coins, sorry, not a token. I think that's going to be huge, because Bitcoin does rule the market. Even though I don't think it should, it does. So if Bitcoin catches a negative 20% bid, the entire market is... Hey, Katie Trading. If Bitcoin, I don't know that it goes to zero, but if Bitcoin even goes down to 18,000, the entire crypto market will retract before we start to see some balancing out there. But I'm really bullish on Ethereum 2.0. I love that. I love that we're seeing this rollout kind of go. We're seeing the price action continue to follow, and it makes sense.
Right.
It
No, I
makes sense.
agree with you on that. Like, just because, Bitcoin was kind of the first, it doesn't automatically mean it's the best. And that goes for Ethereum as well. And one that I followed pretty closely in the past was Algorand, ALGO. And the transactions per second were like insane compared to what would happen in the past with some of these other technologies. But, Ethereum coming out with that 2.0, that's like a next level step for them. And just overall, like, they're just going to keep competing to get better. So on that side of it, I would be more bullish. But again, they get grouped together, and it's a little nerve wracking for me to go long and be, an investor. Waking up one day down a ton of money wouldn't be cool.
Yeah, for sure. I do wonder how it's going to balance out at the end of the day, especially when we are thinking about inflation versus GDP growth. And it's like, where's the no-brainer place to put your money? Because I'm not above getting a node, you guys.
Oh yeah.
I am not above becoming a validator for this thing. And is there a percentage chance loss for sure? And I don't have 32 Ethereum, right? So I'd have to buy a couple to get to that level. But I do in the search for safe yield. I know somebody said, how do you feel about Apple getting into EV? And it's like, hey, I'll feel great about Apple getting into EV when they announce that they're actually doing it and stop bullshitting around with LiDAR companies and whatever else, right? I would love to hear Apple gets into EV. But when I think about my returns on Apple for the year, sitting at 147, 146 we're at right now?
Yeah, something like that.
Yeah, I'm good. Friends don't let friends buy at all-time highs. I'll wait for any sort of dip. I don't know, man. I don't know that I had her higher than 150, 160 EOI, to be honest. I'm not sure that this is my safest bet anymore. I'm holding on to Apple for sure. But I don't know that I dive in deep until I hear some much larger catalyst like EV. And even then, I'd probably wait a quarter because I want to follow a trend. I need to see some momentum build on this thing. Plenty of I just doubt that Apple will fail, though. They'll blow up. If they say they're going to have an EV car, it would explode.
My question is, are they going to have a proprietary charger like they do with their phone? You know what I mean? Like that, I'm just joking. Yeah. You can buy a car, but you got to use a Thunderbolt.
Yeah, you have to buy our specific cord.
Apple straight back down to 118.
Yeah.
Fair enough. I have one last question for you guys, and I kind of want to do this. I think I've become this person, and it is what it is. How are we feeling about Cathie Wood? Is the experiment over? Is this a failure? Are you guys just as bullish and loading up on Coinbase and Robinhood as she is? How are we feeling? Let's go with you, Patrick. How are you feeling about this, man?
So, I like Cathie Woods. I've got no issues with her trades. I've got no issues with her funds or anything of that nature. I look at it as some of the things she's invested in are just, in my opinion, more on the speculative side. Now, that doesn't mean they won't work out, but it's not where I'm going to put my money right now. That's also just not my style. I don't invest in those type of companies too frequently, but I do think it's interesting. She gets, the part that I laughed at the other week was I sent this to our group. Someone made an inverse ARK ETF.
ARK. Yeah, it's called SARK.
Yeah, and I go, okay, either you hate this woman so much that you've dedicated your life to making an ETF to short her, or she scares the crap out of you and you did this anyway.
12%, Patrick. 12% short interest. People are shorting Cathie Woods because this idea for a lot of people is overplayed. And looking at the fund growth year over year plus the top 10 holdings in their potential direction, it might be still overinflated. There's a logical reason to short it. Are you going?
Yeah.
I don't get me wrong. I'm not going short or long on Tesla, but I don't know that that's my bet in growth for the rest of the year.
I can agree with that. Sorry, let me fix that.
I agree. Yeah, no, I like getting her newsletter, seeing what she is buying and selling and stuff like that. But I don't know. She had a lot of, she was in the news, and I guess she's like kind of a figure on FinTwit because of the year she had last year. But I also see that sentiment kind of dying down a little bit, just, from, searching the web on Twitter and Reddit and things like that. And again, you're talking about that reverse ETF. So I don't know. I'm not really going to trail her on any of her trades.
What do you think Cathie Wood says in the morning she wakes up and realizes somebody made an inverse effing ETF for her ETF?
I hope she wakes up and says, I've got free real estate in that dude's mind. I really do, but to dedicate your life about that. Listen, if I'm going to start an ETF, it's not to go after somebody. It's to prove that I'm the smartest guy on the planet, and investing. Why would I do an ETF to prove that someone else is, that I think someone else is not as smart or dumb, whatever you want to call it?
Fair enough. You know what? In the hunt for yield, I think it's pretty hilarious that you could look at Kathy and say, like, hey, on a year where, we're down from highs, I think the year-to-date growth is 0.01%. She's just barely holding on to a green year right now. And it's like, hey, if you do see some momentum to the downside or some possibility, I don't know why you wouldn't, but it is extremely petty to make an entire ETF over it. It's incredible, but I know it's because the shorts are going to get expensive. Like, that's the other side to it. If they realize there's a market for people who want to short her, which there is, and there's a fundamental reason to do so. It's not crazy. Although we have seen this is a market where you can constantly be surprised. So I'm done being down on Kathy. I do think her investment thesis is way too growth heavy for my risk tolerance, but like for some people it is what it is. And
I'm with you, Alaine, 100%.
I spent 8 months this year or 7, just completely shitting on AMC. This is going out of business. It's very obvious that they're going out of business. I don't know why you wouldn't short them to hell. I'm not taking any flyers on it. And look at them, poised for growth. Every single theater except for one is opening and or is open. Sorry, and they're seeing revenue. They've got a huge amount of cash on hand. I don't know. I don't know if I change my thesis on this, man. I might actually kind of go fundamentally bull, especially if we see them open up into the streaming world and really take that on and start, with these rollouts the same way we're seeing HBO and Warner Brothers and stuff like that do. I could get bullish on AMC. So this is a market where you can be surprised.
Alaine, I when we first met, I told you my spy call, right? Yeah. My very first spy call when we first started doing the clubhouses and stuff. And so Mando and I were talking, and we've been talking to other people and other traders as well. I wouldn't be surprised if you see AMC break 75. And I'll say I would love to hear, because I know Chris is a big degenerate with us and trades those things. Sorry, buddy, you can't defend yourself right now. I know you're listening though, but I could see it really going there pretty quickly this year. Mm-hmm. And when it does, I'm going to play it. I'll play the options on the way up, and it's not going to be a popular opinion if I post it on Twitter, but I'll play the options on the way down too. The money is still green. I'll take it coming and going.
Does Twitter have a problem with trading in both directions? Because I think that's, traders trade both ways.
I'm sorry, Alaine. I think you have a bad connection. I can't hear you. No, I'm just joking.
Sorry. I said, does Twitter have a problem with people trading to the downside? Because I think just, good traders trade both ways.
I talked about AMC puts one time, and I thought I would have to delete my Twitter. I was getting attacked. It was unbelievable. Yeah. No, they have a really strong, ape army. There are a lot of cold stocks like that, though. Clover's another one. Yeah. When I do have ideas of maybe going short on something like that, I just don't tweet them. It's just not worth it. It's not worth all the negative mentions and things like that. So.
Well, I'll say it out loud because I don't care about Twitter. Clover is a shit company. They have shit servicing. It's mediocre at best. So sure, if people want to pump this meme stock, go for it. But I don't think there's a fundamental reason. Whereas AMC is starting to give us a real reason to get behind it and potentially really get bullish. And you know what? I'm not afraid to admit when I'm wrong. And I thought this company was definitely going bankrupt, and now I'm not sure. I'm 100% not sure. I'd love to end it with just a directional question. So for me personally, in my trading style, I always look to see where the weakness in the market is and wonder if there's too much selling going on, right? And for me, that just represents the best opportunity. So I see something like a Viacom pullback, a Viacom CVS, complete pullback. I think I see streaming numbers continue to go up. I see their ability to gain both in programming and get their programming costs down, as well as continue to grow grow their subscription base for all streaming products. And I say I'm not sure that this deserves to be where it is. I did that with Twitter. We've done it with oil, right? We do it wherever we can. I think materials would probably be the last sector that did that. where you guys see some weakness and are looking to kind of build up maybe a position or just a thesis around. Let's start with you, Patrick.
So what am I looking at? So right now, I would say I'm looking over at my screen. Sorry, I'm genuinely looking at some of these Dow plays. I think there's some weakness there. I think there's some rotation potentially to happen. Specifically, maybe from a healthcare sector, the second half of the year, given they had a mediocre first half, if you want to call it that. I would call it a bad first half. But I would say healthcare, specifically, Pfizer's had a great run. Moderna's had a great one. There doesn't mean there won't be a pullback, but I think they end the year strong. And then I would even say stuff like, Boeing and airlines. People are going to fly again. People are going to. I don't know about you, but I'm itching to go do something. I mean, so I'm. Those are the
flights
two
every
areas.
month, buddy.
Yeah,
I haven't stopped. I'm with
yeah.
you.
So those are the two sectors I'm interested in.
I love it. What about you, Mando? Where are you seeing some weakness? Where would you want to build a position?
I mean, I'm going to piggyback off Pat a little bit here with just airlines in general. I mean, is it in the near future? We don't know. Again, it could happen at any moment where, Delta is going to shut things down. But airlines, I think people, they did the Zoom hangouts and stuff like that. I think that is a thing of the past. I don't really see anybody going back to doing, Zoom birthday parties or Zoom, business meetings and stuff like that. I understand for the immediate future, yes, but going forward, I mean, people are going to travel. I know a lot of people that, having a job that allowed them to go travel for business. That was one of the biggest perks of having that job. So I'm totally in on travel. And also, I think semiconductors, I know we ran outrageously over the, the last couple of weeks, but that's like a serious problem. Like, so I mean, this pullback on AMD, like, if we could somehow get it under 100 again, I would load the boat. But I don't think it's happening. But I don't see how the semiconductor trade is going to go anywhere. How am I not going to show up the mask? I got it right here. I
want to see the mask, Mando.
All right.
Beautiful.
There it is.
People, you asked for it. What do we do on aftermarket therapy but continue to deliver? And just like kind of to round off and add some thoughts to it. When I think about the weakness in the market, one of the areas that I've been really, really happy in kind of holding would be financials. And in this environment, we're seeing banks that are carrying, different products just continue to skyrocket, specifically the investment banks, but also even when we're thinking about rates and lending, right? Am I necessarily bearish on the idea that Wells Fargo ended their consumer lines of credit? Like, no, I'm actually pretty bullish on that, right? And yes, it does say that our average consumer at some point who needed credit was willing to take just a garbage deal, but currently I'm seeing wage growth rise, and I'm really bullish just on the idea that financials are going to continue to benefit from this economic environment. Right next to that, I'm going to put industrials. I know that materials is like the sector. Materials is damn near the new growth, man.
Oh, yeah.
Like what's going on with copper and steel and tin, it's unprecedented and it's amazing. Yeah, right. Oh, hey, Chris. They're inevitable at this point. EV and semis are too big. They're COVID proof. Yeah, sure. So, right, materials, I kind of see them as the benefactor of a lot of things. But when I think about what sector is going to directly benefit from infrastructure bills, it's going to be industrials in some ways, right? The things that get us to where we want to go. Hey, Berkshire Hathaway just posted 21% quarterly profits, and a lot of that was based off of trains, right? And it's like, well, why? Oh, because the price of freight has gone up considerably. So much like you're saying, where it's like, hey, do I think inflation is transitory in terms of supply shortages in this demand? For sure. But do I think that the prices just drop in terms of like freight and packaging and stuff like that? Nah, we're not seeing that. We're seeing it kind of hold. Specifically with like, if we look at airfare, right, that's sort of holding. When we look at consumer services, that's even going up. And all of those things in a lot of ways, to me, I feel like industrials are the basis of our like kind of system. Everything gets somewhere kind of from an industrial company. and they provide the basis of infrastructure, although it's not utilities. But utilities, I don't know if they make a lot of money until we see a huge EV shift or something new kind of break the game. Those sort of stay where they're at. So for me, I'm looking at financials and really industrials very strongly. And then after that, energy, if we can see like a sort of secular trend start to build and grow. But dude, gas is $5.20 at some places in California right now. And I'm not going to lie, man, if it hits $6, I'm going to stop driving. If gas hits $6 and a flight from Los Angeles to Dallas is still $20, I'm just gonna completely crash. I don't know what exactly, but somebody's doing it wrong, and I don't know who.
No, I just want to say, Lane, what I think is just really interesting, what I just noticed with all three of us is we need that infrastructure. We all kind of have infrastructure there, but we need that to make the next step. If we don't have infrastructure, Tesla and all the EVs, NIO, they're not going to make it. If we don't have infrastructure, the growth trades of the 3D printing. So we've got to build that if we're going to make that next sort of, run up.
Yeah, absolutely. With that said, do you guys have any closing thoughts or a final take on the market perhaps you want to share with us?
Sure. It's going to be choppy for the remainder of August. It's going to be pretty choppy. So, keep your stop losses tight, protect yourself. Cash is king right now. Don't be afraid to have a little bit of a cash position, but, Mando and I will always, I think this is where we go with that, but, just go with the flow on it, whether it's options flow, whether it's your TA, stick to your strategy, stick to your plan, and, you'll be able to navigate this market, and, there'll be an easier market right around the corner to make money in.
Yeah, for sure. How about you, Mando?
Yeah.
Final takes?
Alaine, I was going to say that the Wells Fargo flow is looking really nice. So there you go with your financials. Very, very nice. A lot of money being thrown around there. But, I appreciate you having us on. It was really cool, when Chris reached out to us about this. I was looking forward to doing something. I didn't know I was going to, not have the helmet on, but it's all good. First time, in the world of the internet.
Yeah, Lane, we just Mando and I were the last two bums to do a face reveal to our trading group. Everyone one night did a face reveal, and they asked us, and Mando and I were like, new phone, who dis? And then we finally caught up and did a face reveal.
Yeah, that's so awesome. So if you guys want, man, I just want to roll out the red carpet. Tell the people what you're working on, where they can find you, shout out all your handles and your affiliate links, and just – yeah, what are you on next? Where can people find you, and what should we be clicking on?
Mando, you go first, bud.
All right, yeah. So Flow Bounty Hunters, we're going to post episodes weekly. We got some really cool guests that we reached out to have on. And Alaine, we'd love to have you on as well. I know this is the first time we're really having this, back and forth. But, yeah, we'd love to have you on as well with Chris. But, my Twitter's at Mando Trading. You can check me out on there. I am a Benzinga affiliate. I have my, my referral code on there if you would like to join. And I'm also affiliated with Unusual Whales. That's where I get a lot of my flow data from. So code Mando for 5% off there.
Yeah, so I'm OPT Flow, just like it says on the screen. We've got our podcast, Flow Bounty Hunters, every Sunday. Alaine, we got to have you on because you and I we got to have a, I think it'll be fun. You and I can go back like we were in the Clubhouse and, really dive deep into everything and give some good technicals and enjoy that. And I get all my flow from Black Box Stocks. I've got my affiliate link on my Twitter. Appreciate it if you guys use it. If not, I love all the flow tools out there. So trade with flow is what I would say.
Awesome. And I'd love to come on, you guys. I love the conversations. Honestly, this is just a continuation of a conversation we have all the time. So thank you so much for coming on the platform and having it with me. Shout out to Benzinga. Definitely, hey, you guys, check out our TradingView affiliate. We love TradingView. And honestly, this has been another great episode of Aftermarket Therapy. I appreciate you guys. I appreciate the audience. I wish we would have gotten to more questions and stuff like that, but it's all good.
There's always this episode 2, right?
Yeah, of course. There's always time for another one, and there's always time to make it more interesting. Hey, next episode, I'm going to start doing this. If anybody in the audience as well, next episode, we're doing reactions to other stock market, whatever, analysts and gurus' stock picks. We're going to be reacting to I fully intend to talk shit about their trades. So, with that said, this is Aftermarket Therapy. Signing out. Hope you guys have a great day.
Bye, guys.
Bye, everyone.